May 31st, 2024, an historical time period. Do you know why, Robert?
24th of May is 1 week ago.
Maybe, and June 5 is next week, and June 1st is tomorrow, and summer is about to begin. Well, what is it, June 21? But on this episode of Real Estate Chat with
Jonder Perez, the magician.
and Robert E. the statistician and magician and wizard of the markets. So we're going to find out what happened in the May market, what to expect ahead of interest rate cuts next week. We're going to get a lot of comments about this one. And what's to come for the summer real estate market here in Toronto and perhaps around the world. Okay, Robert,
And perhaps around the world. You're right.
perhaps around the world. Inventory. What's the inventory story happening right now in the greater Toronto Regional Real Estate Board trading area?
Okay, well, we adjust our raw inventory number and we come up with 21,144 and divide that by our adjusted 6881.8 sales, and we come up with a smidge over 3 months of inventory, which has sort of been our warning guideline. 4 is slow market, and 3 has been there many times before, and there's more houses, it's more balanced at 3 months. So this is a summary. Inventory is higher on Stratus than it is on I'm sorry, the other way around, Realm, than it is on Stratus than it is here, but it'll be about that. And sales are going to be somewhere 69 to 71, just depending on when they cut the starting time and cut the finish time on what they report. But it's going to be pretty close to exactly that. So we're off the 5-year average, which we got to think of as mostly a boom by a lot, off the 10-year average by a third. Like there's more listings by a third, 30% than normal. But I think what we are in is a holding period, very much like you said at the outset, of what's going to happen on June the 5th. Is there going to be an indication that the worst is over and interest rates are going to come down, so that all these speculators, all this speculation about should I take a fixed or should I take a variable, can start? Or will it be delayed? And this is going to be a significant one, because right now there's a lot of people that are on pause. And if you've got your house up for sale, you're saying, what happened to the customers? And if you're looking around, you're saying, well, I want to have an indicator before I make a move, because inertia is the strongest force in nature. And if I'm going to do nothing, I'm going to continue to do nothing until something tells me that I should move off that position. So here we are.
Okay, and the interesting discussion here, Robert, for those real estate chat viewers who have liked and subscribed, and for those of you first time watching this, please click like and subscribe if you like this episode and you want to hear two real estate brokers chatting about real estate on a constant basis. The question becomes, number one, will this level of inventory be a concern? Depending on the outcome, obviously, of next week, it will alter the mindset of the general buying public. And number two, we've had these discussions before that, of course, there's a herd mentality. Everybody's waiting, everybody's sitting on the fence. So make sure you watch the episode previous to this one where we talk about that. Bank of Canada is what decision is what everyone's hinging on in terms of what they're going to do, but it won't save them at the end of the day. So Robert, we've got a couple of days, if you're watching this whenever we publish it, before June 5th. Considering the amount of inventory out there and considering that some of these sellers might be motivated, should I buy now at these a bit whatever rate, higher rate, and secure my property and be able to negotiate a good price? Or do I wait until, let's say there is a rate cut on June 5th, psychologically everybody thinks, wow, you know what, I think everything's okay now, go into that market. I'm thinking I'm paying a bit less, but really a quarter point, as you've said in past episodes, is really nothing. But then prices start to go up because the herd of buyers starts to go in. What's the best strategy over the next couple of days?
Okay, let's say that you're a buyer and you're absolutely serious about buying a house before the snow flies. It's not tomorrow, but it's definitely, you're going to make a decision within the next 3 months. So what you are looking for right now, as always, is how long has the property that you're interested in been for sale? If it's 2 days, you can't deal with that fellow. or they may be anticipating a bidding war in a few days. Look for something that's been for sale for more than 3 weekends, because now they're getting a little tired of it. Never mind what they're asking. What's the closing date that they're requesting? If that closing date suits you and it's been for sale for a long time, then hit them with a bid, firm, unconditional, low, and see what he does or she. They're going to respond to you, and you can respond to that. If they go too high on the money, you walk. If they go good for except for everything and they want unreasonable something, or then you throw in a condition on home inspection. You throw in a condition on finance that you don't need, but then just to get their attention again, that they don't have 10 offers. They have one, they have you. So if you're a buyer, be a canny buyer. If you're a seller, realize that nobody is stupid, that you no longer control the market. And if you've been for sale for 3 months, there's something wrong with your property. If you've been for sale for 3 weeks, there's something wrong with your property. And there's only a few things: the condition of the property, the price of the property, and what always gets blamed is the promotion of the property. It's not the relator's fault. If for some reason they took the listing at whatever price they would, and things changed on that, and they've been reluctant to tell you that things have changed, and so you're just not going to get it on August the 1st, then that's their problem. They're afraid of you. But you want someone to tell you straight between the eyes, what do you need to do with the time you have available, the property that you have, and the competition that you're facing. It's always the same. It's just right now, it's a transition where people don't know what to do. Relators that have been in the business for 10 years don't know what to do because they never experienced the condition again. This may be over in 2 weeks.
Price and condition of the home. Essentially, it'll come to that, and the condition of the home dictates price anyway. So ultimately,
Well, then
price.
there's also the availability. Is it a tenanted property? Blah, blah, blah. And then the promotion. Does nobody know about it? What's wrong with it? Is it just at the wrong price? Or is the owner's expectation wrong? So, yes, how much and when?
Sales, Robert.
Okay, well, this is our regular January to December recent sales, recent years of sales comparing the Mays. So our star towards the middle bottom is at 68.81 on May the 31st, and it's the 23rd best May, which it's been all year long. And most of the time in these last most of 2 years, sales have been the 20th, the 24th, best of the last 29 years. So they're lousy, but inventory was low and that kept everything tight so that prices didn't fall. If inventory now moves up, so that months of inventory hits 5, then things will change on the price department. But if it stays down 3 or less, then it won't. But right now, this is sales only. Sales are 23, 26% off the 4 and 10-year average. And I say 4 because I'm not counting 2020, the COVID crazy time. We're half the maximum, which wasn't that long ago, and we're 24% off last year. So since our prices have not fallen, since the majority of listing representatives are holding offers on their new listings, the number of new listings, the ratio between the number of buyers and the number of new listings that are buyable has stayed fairly constant. So while the sales are off, the listings are off, and they've kept each other in check. We will see what happens now, because we're also heading into June, which is normally good, July, August, which is quiet. So let's call it the quiet season. It's not doldrums, it's not terrible. It's just, if you wanted to move for school, you've done it already. So we're in between market seasons. So right now, there's nothing wrong with 6,800, 7,100, whatever you want to call it, sales for the month of May this year. But last year there was 9,000, and in other years there've been 12,000. So it's not a great May, but it's only as bad as it's been for the last little while. So we're in this balanced at a lower level milieu that we've been talking about for the last 2 years.
All right, let's zoom in. Well, we can't zoom into this, but for those of you watching this,
the whole reason for this one is to see where are the top half of it is listing. So the top half of it shows that we've got 47% of all the listings are condos. We've got 44% of all the listings are in 416. We go down to sales. 32% of all the sales are condos. 39% of all the sales are in 416. 22% of all the sales are condos in 416. Correspondingly, 60% of the sales, that's normal 60-40 ratio, is in 905, and 10% of all the sales, 11% are condos in 905. So the action is in, I guess it's sort of equally split between condos and freehold in Toronto, but in Mississauga it's the reverse. And we can look at comparisons on there from 18 months ago and 24 months ago and 36 months ago, but there's so many variables we can't remember what it was like in the base year that to say it's up 61%, does that mean anything? No, it doesn't. But if you monitor it, everything is actually still in keeping with the regular norms. It's just there's a few more listings than there were 2 weeks ago. There's a few more listings than there were 2 months ago. There's a heck of a lot of more listings than there were on February the 15th.
So I guess it's just a matter of making the right decision, as we've always said in every single episode, is looking at the market conditions, deciding what's right for you, understanding that rate cut or not, it's an effect on the perception of the general public.
Supply, demand, and consumer confidence. So a cut here, much anticipated, a few months ago, will indicate to the buying public that rates are at the top. Also, one thing that we're hearing from our mortgage broker friends is that just because it's the posted rate and just because we think it's the discount rate, there are discounts more to come. The lenders are anticipating rates dropping. And if you're a good customer, if you're a renewing customer, if you have lots of equity, you can ask for a better rate and you will get it. They want the business because sales are off, business for mortgages off. They want to put that money out. We won't get into how they create the mortgages or any of that nonsense, but they need to put the money out. So there is room down on even the posted rates. Right. Ask for it, demand it, go somewhere else, demand it. But don't do it at the last minute because then you got no leverage on time.
Right. So hang in there, Real Estate Chat viewers, and make sure you continue to watch our upcoming episodes as we will have commentary on the upcoming transitional announcement happening in a few days of this episode. Thanks for watching this episode. If you have any questions, type it into the comments. If you have any comments, type it in the comments. Take care and bye for now.
See you later. Bye-bye.